Now, Barclays is the first of the big banking groups to unveil annual results and has announced better than expected profits. But not everyone is celebrating. Some shareholders think they're getting too little, while star bankers are still getting large bonuses. Well, underlying profits were at £5.5 billion. That's up 11% on the year before. But pre-tax profits were up 32% to just over £6 billion. Bad debt charges fell by 30% to just under £5.7 billion. The total bonus pot stands at £3.5 billion, down 7% on last year. But most of that, £2.6 billion, will go to its investment bankers. The average bonus at Barclays Capital is just under £105,000. But basic pay is up. Barclays' total salary bill is £8.8 billion. That's up 13% on last year. So let's discuss these results. Here with me in the Gherkin is Roger Lawson, the chairman of ShareSoc, which campaigns on behalf of individual investors. And alongside him is Professor Chris Roebuck from the Cass Business School here in the city. Welcome to both of you, gentlemen. Barclays, can they sit back and proudly say we've done what the government wants, we're paying less out in bonuses as a percentage, and more of those bonuses are going to be paid in shares, Professor Roebuck?
Yes, they can, because they've met the requirements of the government. However, that's not the requirements of the public. And as far as the public are concerned, when they see that total remuneration has actually gone up, base salaries have gone up, they will be asking a few questions. But in all fairness to Barclays, what has to be borne in mind is that they are existing in a global market, and even though they're a British bank, there are overseas competitors less than 100 yards away from them. And if they don't meet the market rate that is effectively determined by the 21 big overseas banks in London, those people will walk 100 yards away and go somewhere else.
Roger Lawson, do you accept that? This is a fair level of pay if you want to hang on to the best people?
Well, I think the problem is that the bonus culture in banks hasn't really changed. I think if you look at Barclays shareholders, they might be slightly unhappy. On the other hand, they'd been a lot worse off if they were RBS or Lloyds shareholders, so they might have a somewhat mixed view about it. But the big problem is still that the top echelon of bankers and their directors are paid too much.
Well, yes, and so overall remuneration, even though the bonus pool is down 7%, overall remuneration has increased by 20%. And if you look at that top tier of staff, the senior staff, they own 3 times more than investors in dividends. I mean, shareholders aren't going to be too happy about that, are they?
No, I mean, this has always been the problem in banks that are primarily investment banks. The senior managers walk away with most of the profits. And how you control that, I think you have to change the culture, or even introduce systems like they have in Sweden, where you have remuneration committees that are elected by shareholders, not determined solely by the directors.
I think it's fair to say that really there are people within the banking industry who are saying, actually, there are people who are getting bonuses they shouldn't be getting in terms of average performers, and that really the bonus should be there for people who are performing exceptionally. And also, it's certainly true that if you look across the banking industry globally, there is pressure to try and get the performance levels up so that you can justify the bonuses you're paying. But I'm certainly not saying that actually the bonuses are acceptable. If you look at the total level of bonuses, that actually pro rata, you could logically argue that it is too high. However, a bank gets in a certain amount of money, and if the government wants more tax, if the government wants them to keep more money aside for a rainy day, and they feel they have to pay their staff to compete in the global market, then the people that suffer are the shareholders.
Well, this is an issue, isn't it? There are more constraints on them because they've got to keep their capital up in case of problems further down the line. They have to pay the bank levy as well. Barclays has to pay £400 million a year to do that. There's going to be less left for the shareholders.
But the big issue still remains that the senior managers are taking too much in terms of the profit proportion. And if the profits are there, you might say that's fine. But the problem is, when the losses were there, they weren't having the losses recouped. No people who are acting effectively as salesmen don't have schemes whereby when they lose money they get deducted from their base salary, which they ought to have. That is the basic difficulty. I'm not saying it's easy to solve this problem. It is a big problem if banks want to pay competitive rates in the world marketplace. So it's not an easy problem to solve. You have to change the culture, and that is difficult.
Culture's never going to change, is it?
Yes, I think it is
If it
possible.
doesn't change after a world crisis like this, then it's never going to, is it?
It is possible to change because the banks and the bankers will respond to the market. If you manipulate the market, and that's what's happening when you look at these additional capital requirements, the governments are getting together to effectively manipulate that part of the banking market. There is no logical reason why the G20 shouldn't get together and say we can manipulate the bonus market, and there's no logical reason why they can't say, OK, we'll bring down all bonuses globally by 30%, and then that's fair on everybody, and London isn't at a disadvantage.
I'm sure a lot of members of the public would approve of that. Professor Roebuck and Roger Lawson, thank you both very much.
Thank you.